President Donald Trump has signed an executive order that extends the 90-day pause on reciprocal tariffs on August 1st.
So CBS News business analyst Jill Schlesinger, she's joining us to talk about what's expected next and how it might impact consumers. Jill, good morning. Remind us now where the tariffs stand with this new executive order, because we know it can get a little complicated.
Yes, absolutely. We need timelines and flow charts to follow along. But right now, there are 10% charges on imports from all countries, 30% on China, 50% on steel and aluminum, and 25% on cars. Now, in conjunction with extending the deadline to August 1st, the president sent letters to 14 countries, including big trading partners like Japan and South Korea. And he said that these countries are going to face even higher tariffs if they don't reach agreements with the U.S. by August 1st. Now, look, even with this pause, the current tariff rate right now, it's the highest level in almost 90 years. So it's significant.
Yeah, very unprecedented there. And I think a lot of our viewers right now are wondering, how could these tariffs impact the average American?
Yeah, it's interesting because it doesn't happen automatically and it takes some time. So the U.S. company that imports that good is on the hook for the extra tariff charge. Now, the importer has a choice. Do I absorb the extra cost? That will reduce my profit. Or do I pass it along to my customer, my consumer, right? Now, if they do something like pass some or all of it along to us, then prices could rise for those goods. Now, as I said, so far, the first 6 months of the year, we haven't seen the inflation rate rise. But economists fear that even if these lower levels remain in place, that we are likely to see the inflation rate tick up from today's, say, 2.5% to above 3.5% by the end of the year. Now, net, I know it's not every household, especially if you buy a big ticket item like a car, but on average, this could cost a household almost $2,000. So it is significant.
Jill, we were just, kind of joking a little bit about the flow chart, but not really there. I mean, there is a lot of uncertainty when it comes to these tariffs. What might that mean for the Fed and the interest rates?
Well, it's tough for the Fed because, remember, last year they cut interest rates by a full percentage point. And before the tariffs were announced, I think they were pretty set on reducing rates even more. But these tariffs, they can have a double whammy on the economy. They can raise the inflation rate and also hurt economic growth. That is called stagflation, a stagnating economy with inflation. It means that I think the Fed is really not going to take any action until they see how tariffs impact the economic data. And unfortunately for consumers, this means that interest rates on credit card balances, auto loans, even mortgages, that they are likely to remain high for the foreseeable future.
Okay. All right. Well, Jill, thank you. As always, great to talk with you. And you can see Jill regularly on CBS Mornings and the CBS Evening News. For more analysis, go to JillOnMoney.com.